when you look at the macro framework, you look at the longer term charts, looking at some traders saying the top is in, it's highly unlikely to be in. Highly unlikely because the macro's nowhere in. And I don't get it. I don't get all these people talking about it's the end of the business cycle. It's the beginning of the business cycle, not the end. It cannot be the end of the crypto cycle if it is the beginning of the business cycle. It's as simple as that. But no, people just want to use a chart and suggest that no macro matters. They want to use whatever it is that it do. We try and put as much together as get probabilistically right.
Raoul Pal warned of an impending liquidity crisis and noted that cryptocurrencies are already showing early warning signs. He described the recent pullback in cryptocurrency markets as an early indicator of what could happen to stock markets, explaining that the latter are behaving like a stressed financing instrument, a reflection of a failing system, while stocks are still protected by share buybacks and the search for returns. However, he cautioned that this downward trend could affect markets if massive liquidity is not injected, given that the Federal Reserve and the U.S. Treasury are locked in a struggle to control it. This would allow these funds to be directed to retail investors rather than institutional ones. Quantitative easing does not benefit retail investors. Liquidity management is now a political issue, not a monetary policy issue, he concluded. The goal would be to inject this liquidity without penalizing individuals, as Republicans need to win the midterm elections. If Paul's predictions are confirmed and liquidity is injected into the markets, the end of 2025 could be favorable for cryptocurrencies, as they could have a ripple effect on both stock and cryptocurrency markets. According to Raoul Pal, the market is not topping out. Grab the biggest dips of Sui Solana. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
Sui. Oh, look at that chart. This is the first cycle token. Tends to be good in the first cycle, and because it's all full of promises and a lower free float, and capital can drive these higher. Nothing wrong going on here. We're just basically in a wedge. I love this chart. This is Sui ETH. We used this when we really went overweight Sui back in 2024. And we've got a very similar pattern here. What we'll see is a pull down here somewhere, and then we should break this trend, and then we come back up here, and we should get a dramatic outperformance, the banana zone. So we told you, we put out all of our signals based on liquidity back in 2022 and said the low is in. We really got that right. We bought Solana. Solana absolutely crushed it. And then we switched later. And then back in 2024, we said, okay, we're now about to start the banana zone. Why? Because we're starting to break the new all-time highs. And this is Bitcoin. So we actually gave out the signal on liquidity in that week, the 5th of August week. I was in Zambia, came back. We said, yeah, banana zone is about to start. And by September, we said, this is it. And what happens? The first leg up goes from 52,000 to 108,000. And you lot go, oh, okay, bananas. And then we said, look, there's a phase one correction. Remember, global M2 was correcting. Oh, it comes back down. That's the phase one correction of the banana zone. Phase two of the banana zone, we're still in it. We've barely started it. The phase two correction should come from much higher, pulls back and then goes higher. This is not the phase two correction. This is still part of the banana zone. So there we are. It's just like the banana zone doesn't look obvious, but when you look back on that chart, it's like, oh yeah, it's a banana. And you go back here. Oh, it's a banana. Now this banana is going to be longer in time. So therefore less spiky in price at this point. Maybe that'll come later.
Following the end of the 43-day budget impasse in the United States, President Donald Trump signed a spending bill passed by both houses of Congress. Raoul Pal analyzes the impact of this event on the cryptocurrency market. He predicts a surge in liquidity due to massive Treasury spending. This phenomenon is expected to continue in the coming months. Furthermore, the U.S. dollar is expected to begin weakening as balance sheets continue to improve. Paul also highlights year-end financial tensions as the next key factor to watch. He also analyzes the situation in other countries, noting that China will continue to expand its balance sheet and that Europe will implement fiscal stimulus measures. Raoul Pal describes this series of events as a liquidity flood. This forecast suggests that the global market will experience numerous dynamic changes that will likely affect exchange rates and monetary policies in various countries. Meanwhile, the U.S. Federal Reserve remains divided on a potential interest rate cut in December. Federal Reserve Governor Stephen Moran believes a 50 basis point rate cut would be prudent, while Fed Chair Francis Mary, who initially supported such a cut, is now hesitant. Minneapolis Federal Reserve President Neil Kashkari is also wavering amid conflicting economic signals. Meanwhile, the cryptocurrency market has plummeted, with Bitcoin falling below $100,000, followed by other major assets. All eyes are on the monetary policy meeting scheduled for December 10th, where the next rate cut will be decided. Following the end of the U.S. budget impasse and Raoul Pal's various predictions, global financial and cryptocurrency markets appear poised for significant turbulence in the near future. Investors and market analysts are urged to closely monitor monetary policy announcements and potential economic developments. With the end of the latest partial U.S. government shutdown and markets refocusing on macroeconomic issues, Pal presented a roadmap centered on liquidity, which, in his view, has direct implications for cryptocurrencies. Now that the U.S. government has reopened, what's next? Pal asks. He immediately mentions the General Treasury Account, GTA. We should expect GTA spending to begin significantly increasing liquidity within a few days, and this effect should continue for several months. Of course, quantitative easing, QA, will end in December, and the balance sheet will gradually increase. We should see further weakening of the dollar. In practical terms, GTA withdrawals inject liquidity into bank reserves and money markets, reversing the reverse drain that accumulated during the partial government shutdown. Meanwhile, the Federal Reserve has already confirmed that quantitative easing, QE, will end on December 1st, 2025, shifting from actively reducing the balance sheet to fully reinvesting maturing Treasury securities and adopting a more cautious policy. Pal argues that these two mechanisms steer the system toward greater dollar circulation in financial markets, a context he considers favorable for risk assets, including cryptocurrencies. The short-term risk, he states, is a classic year-end liquidity crisis. The next crucial step is to avoid such a crisis. Several temporary measures to inject liquidity are to be expected. The use of term funding and the Standby Repurchase Agreement, SRF, is the most likely option. Here, Pal is referring to term funding facilities and the SRF, which the Federal Reserve can strengthen to ensure banks have access to liquidity in the event of a sharp increase in overnight interest rates. Effects are expected in the first quarter. The SLR should lower interest rates as banks buy more bonds. Relaxing this ratio for Treasury securities and reserves has been debated for years, as it would allow traders to store more government debt without violating regulations.